and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Thursday, March 17th, 2022, and I am pre-recording this Trading Places Live for just a little bit later this morning. Currently, we've got futures down just a little bit, not bad considering that crazy wild action we saw at the end of the day yesterday. Of course, the Fed announced a rate hike and several more to come. Market was all over the place. Didn't really know what to expect this morning, but we are down slightly. Currently, we have the Dow futures down just under 100. S&P 500 futures down about 14 points. S&P 500 futures down about 55. So on a relative basis, NASDAQ futures down just a little bit more on a relative basis. Crude oil prices, though, today up 5%, over 5%, back to about $100 a barrel. We had closed down at the 95 level on Wednesday. So it does look like maybe crude oil jumping again here. We have the U.S. 10-year Treasury yield down 5 basis points this morning at 2.14% after we had moved a little higher yesterday. Very interesting day and rest of this week ahead, and I'll explain why in just a couple minutes. Before we get into any of that, though, I do want to go through the agenda for you today. We've got starting off a daily market recap, as we always do. Then we'll get into talking technically. Max Pain, it's option expiration week, and options expire tomorrow. So good time to take a look at what might be going on there. Then we'll get into the earnings spotlight. Not a whole lot going on with earnings, but maybe one or two to show you there. And we'll wrap up with the 3 you must see. First, I do want to let everyone know, if you are unfamiliar with earningsbeats.com, if you're new, I'd suggest that you go over to earningsbeats.com. So if you go to earningsbeats.com, scroll down, you will see an area where you can sign up for our free Earnings Beats Digest newsletter. There's never been a better time to sign up. All it takes is name, email address, and hit that subscribe button. There's no credit card required. You can unsubscribe at any time. We don't sell this information to any third party, so you don't have to worry about that. We'll keep your information private. But next week, we are going to have a free event, and it is going to be a Q1 market update. And for those of you maybe who don't know, back at the beginning of the year, I predicted a cyclical bear market. I predicted the market was going to get hit pretty significantly here at the beginning of the year. I'd been writing about it at StockCharts as well, been talking about it on my shows. Well, I'm going to give you some more thoughts about what I think currently is taking place. And I think the timing is going to be impeccable, because right now we're getting this rally. Is it options related? Is it a bottom? Well, I think maybe the next week or so will give us some more clues. And we're going to have this event next Wednesday after the market closes. But in order to attend, you're going to need to be on our within our community, our Earnings Beats Digest community. Obviously, our paid members will be invited as well. But all of our community will be invited. So just make sure, if you're not already signed up, that you sign up for this Earnings Beats Digest newsletter. Next week, when we do have the event, we'll make sure we get room instructions out to everyone on our list. All right, let's move on to the daily market recap. It was a wild day yesterday, and trust me, I expected it to be a wild day. I've been telling our members the volatility I expected to be extreme, and I said it would be in both directions. Didn't know which way it would go first, which way it would go last, how many times it would go back and forth. But it was set up to be a wild July 4th type of fireworks event, with the Fed raising interest rates for the first time in over 3 years. And it was. I mean, the market was all over the place. But by the end of the day, we were on the high. Was I surprised? Yeah, probably a little bit, especially after the initial reaction at 2 o'clock, where we went down. But we rallied back strongly. The Dow Jones Industrial Average finished up 519 points, closing back above its 20-day EMA. And if you look across all of our major indices, we did that across the board. So step one, taken care of, gotten through the 20-day EMA. So that's at least a positive start. Now, whether or not we can finish it and continue moving to the upside remains to be seen. But that was the first step. Had to get through, close above the 20-day EMA, and we did that on Wednesday. S&P 500 up 95. NASDAQ up 488 on a percentage basis, almost 4%. I mean, these moves are crazy. The volatility on the NASDAQ yesterday, we were up over 400 or close to, I don't know if it was 400 or not. I think it was over 400 early in the day. And we started drifting lower. And then the announcement came out at 2 o'clock. The NASDAQ almost went red after 2 o'clock. Around 2:30, 2:40, we were barely positive. Maybe NASDAQ was up 50. So it had given up almost everything. It looked like prices were just ready to collapse. And then the buying frenzy began. And we ended up coming all the way back up, not only recovering all that was lost intraday, but closing on the high. 487 points, almost 4%, 500 points on the NASDAQ. The index is only 13,400. That's a huge move. Anyhow, mid caps up nearly 3%, up 72 points, and small caps up 2.5%, which was 32 points. All 5 major indices closed below the 50-day moving average. Actually, small caps did manage to close just above the 50-day. I mean, literally like fractionally. And the mid caps were almost right on the 50-day, fractionally above. But essentially, we haven't had any definitive closes on our major indices back above the 50-day moving average. So that's something we need to watch for. Discretionary, technology, both leading on the rebound. Not a surprise there. Why would I say that? Well, these are the 2 areas that have the companies that trade a lot of options, many of them underwater. Many of these companies had so many in the money put options out there that I wasn't surprised to see it rally. Now, after the announcement, I thought, okay, maybe that was all the rally we were going to get, but we did come back, finish very strong. And I have to say, the technology group in particular, that AD line remains in an uptrend, even though prices have been in a downtrend. So this, to me, just leads more confirmation to my belief that this is not going to last. We may go down one more time. And if we do, I would probably be ready to buy. Well, I personally will be ready to buy. But what happens between now and then? Do we have one more leg down? I think that's the biggest question for me in the market right now. And while I was pretty adamant that we did, I still think we do, but I'm definitely not in the 90-10% camp anymore. I would say maybe I think we go lower, and it's really going to depend on how we finish this week and start next week. I'm going to still say 60-40, 65-35 percentage basis. That's what I would kind of label it, whether we go lower or not. I still believe we do. But I want to see how we trade over the next, couple of days. This bounce could simply be nothing more than options. We were so far underwater. We had our Max Payne event a couple of days ago, and it showed how much room we had to the upside. And so the market could be moving up quickly to wipe out a lot of these put options, a lot of calls that have been bought over the last, several weeks. Most of them had basically gone down. The values were down to about zero. And then, of course, we had a lot of the puts, that were doing extremely well. So there was a ton of in the money put premium. And so this reversal is helping to balance some of that. And I'm going to talk about Max Payne in just a minute, so I won't talk anymore about it here. Anyway, financials rallied pretty nicely, up almost 3%. Communication services up 2.75%. This is an area that's been under a lot of pressure for the last several months, starting to see a little bit of strength. So that's good. Energy. Are you surprised energy was down? This is the one group that's been doing really well, and it's option expiration week, so getting a pullback. 10-year Treasury yield. Yesterday, you can see we got up to 2.25%. Pretty significant move. We did manage to come back down, close up only 3 basis points to 2.19%. One of the biggest problems I have is with the market is that the Fed is raising short-term interest rates, but the 10-year Treasury yield gives us a little bit more of an idea of the mortgage rates, what's going on there, and the longer end of the yield curve. And we're going up, but we're just not going up as fast, nearly as fast as what the Fed says they're going to do on the short end. That's recession material. That's a problem for the banks. That is going to be, and the fact that I know we just broke out, but we're not much higher. I'm gonna pull this back, or let's go back just a little bit further here. Go 2 years on this chart. I mean, when inflation first started to show its face, it was back in about February, March of last year. And you can see that the bond market, there was a lot of selling going on in bonds and the yields were rising. And that was building in the inflation, in my opinion. I think that's what was going on in the bond market. Once we actually got the news and we saw inflation surging all last year, the 10-year Treasury yield went flat. Why wouldn't you be selling bonds, sending the yield soaring when inflation is surging? Well, the time you wouldn't do that is if you don't believe that inflation is going to be a long-term problem. Now, yeah, we have broken back out again, but 7 rate hikes the Fed talking about on the short end, I'm not seeing that in terms of, I'm not seeing that kind of inflation fear in the longer end of the yield curve. And this is where investors, I think, should be demanding higher returns to, offset the effects of higher inflation. We're not really seeing that. I mean, yeah, again, we're up a little bit. We've gone up to 2.25, but we were up to 180 just, a year ago. So, and we were at 180 a week and a half ago before we had this latest surge. Today, we got the 10-year Treasury yield down 5 basis points. So I'm just not seeing that rush out of the longer term bonds. And that's a problem for me. The market is saying inflation is not as big a problem as the Fed. Now, I think the market maybe is relieved that the Fed is at least willing to fight. But honestly, I think they should have been considering this a year ago or 6 months ago, not now. I think now we're starting to already see signs of a recession. And you're telling me you're going to raise interest rates 7 times in a year? I don't know. Something just doesn't smell right to me as far as that big rally yesterday afternoon. But is it options related? Is it, the worst is behind us in the stock market? Well, we're going to find out, and I'll be here monitoring it. That's for sure. All right, let's move on to talking technically. I wanted to first bring up a chart that I've been watching. Just a few key ratios. Our Earnings Beats members certainly know this chart very well. This is the S&P 500 right here, and you can see this is a 10-day, 10-minute chart. So we've got, going back through March 3rd, and then through yesterday, March 16th. So the last 10 trading days. And we were going down, sideways consolidating. And then finally yesterday, we made the breakout above all this sideways consolidation. And you can see the equal lows down here. So it was important to get back through this level right here. Anytime you're in a downtrend, you get a reaction high, you hold that support area and then you go back up through. That's a good thing. So I would say, short term, we probably got a little bit more upside based on this. But I also like to see sustainability ratios. In other words, yes, the S&P 500 is going higher, but is it a risk on type of environment or is it risk off? Well, it's been mostly risk on. The XLY, XLP has broken to the highest level we've seen in the last 10 days. Price action hadn't. So that's a good thing, right? IWF, IWD, this is the growth area versus value, large cap growth versus large cap value. Breaking above the earlier high from Wednesday. And also on the verge, I don't know if it's quite broken out above this other high, but it's pretty close. I'd say this is a decent move. And then I look at the NASDAQ relative to the S&P 500. NASDAQ is more aggressive than the S&P. And so I'd like to see the money flowing there. Well, the uptrends clearly are in place on all of these ratios. Haven't quite taken out the high from March 9th, but on, not too far away. I would say, the sustainability ratios are okay at this point. I don't have a problem with what's going on here. The pullback here was that 2 o'clock drop. As soon as the Fed said we're raising rates and we're going to raise 6 more times, well, you can see market did not react very well to that at the beginning. But after we fell back about 80 points, 70 points on the S&P 500, we came back, got all those points back plus another 40 on top of it. So the S&P ended up 95 yesterday, 43, 47. So what does that do for, the market? Where do we go from here? Well, what I would say is, okay, we've gotten through the 20-day. I've talked about on the daily chart, on the intraday chart I just showed you, here's the low, there's the high, here's another low, and then the breakout above this high. Okay, so that looks good on the short term. Then you got to step out to the longer term. Look at a daily chart. On the daily chart, I'm still seeing a downtrend. Now, getting back through the 20 is good, but we did that before. That didn't necessarily mean anything. We didn't get through the 50. We didn't get through the prior high on the daily chart. So now I think, and this is why members I've been talking about, maybe on the air as well, but 4,400 is the level I've been watching. Maybe 4,400 to 4,410 or 20, something like that. You got the 50-day coming down, and right now that's at 44.45. So is this going to be something different than what we saw back in February? Or are we maybe going to try to get up to the 4,400 level, right beneath the 50-day, and then see where we go? I just want you to be aware that it's option expiration week. I'm going to show you something on the sectors in just a minute, but let's step this out and take a look at the S&P now on a weekly chart. Weekly chart still does not look good. The weekly PPO has gone negative. We're still trading below both moving averages, both the 20 and the 50. So when you're looking at the short term looks good. I think the action the last couple of days, especially yesterday afternoon, that rally back at the end of the day, that was really nice. Short term, give the edge to the bulls. The intermediate term, looking at the daily chart, there's still work to do. Looking at the weekly chart, bears are completely in control here. So, I mean, we've had rallies. We have not gotten back through the 20-week moving average. 20-week moving average, by the way, 44.51. 44.51. The daily chart we just looked at, the 50-day moving average, 44.45. 6 points between the two of them. So here's the deal. If the S&P 500 can get back through 44.51 by, end of the day tomorrow to close out the week, then we will have the first close on the weekly chart above the 20-week moving average. We'll also be clearing the 50-day moving average. We'll also be clearing the recent price high, which was just over 4,400. So that is what I would say is much more meaningful. Not that yesterday's action wasn't good. That, don't get me wrong, that was a great move getting through the 20 days, step one. But we got a lot more to do. And the question is, can we do it? I'm guessing no. I'm going to say that we don't do it. I think we roll back over. I think the Fed has locked us in now to a recession. And I don't think that recession is fully priced in. Watch some of the large cap growth names. I think that's going to be, the Apples, the Googles, the Amazons, the Microsofts. Those are the ones that held the market up throughout 2021. And if for some reason, somehow we can avoid a recession, I think those are the groups, those are the stocks that probably carry us back to the upside. If we are heading for a recession, I expect those probably to lead us back down to the downside. So those would be individual stocks I'd keep a really close eye on. All right, so let's move on to the sectors. So this should come as no surprise. Look at what led yesterday. Consumer discretionary, technology, communication services. Ordinarily, I would say, give it a golf clap. Everything looks good. Market going higher. This is perfect, right? Well, the scooters, and I talk about this a lot, option expiration week. Normally what happens in option expiration week is whatever has not been working all of a sudden works again because you got a lot of it in the money puts. And then everything that's been working all of a sudden doesn't work anymore. Why? Because you got a lot of in the money calls. So look at what's on the bottom here. The two highest scooter ranked sectors yesterday couldn't catch a bid, or certainly on a relative basis couldn't catch a bid. 99.7 energy, 93.8 utilities. And then you look at what worked yesterday. And if you look across the scooters, let's just pull this up in scooter order. So the top two scooters lost ground. And then as you get down and work toward the lowest ranked scooters, that's where you saw most of the strength. So you have to at least question whether or not this is option related. Maybe it's the bottom. Maybe we've hit bottom. Hey, I'm still long-term bullish. I've never once swayed. I believe that this is short-term to the downside. My only question is, do we go down one more time? It's not whether we're going to go back up eventually and set new all-time highs. I am not a fan. I'm not believing this is the stagflation of the 1970s. I don't believe that at all. I think short term, yeah, call it what you want. We're going to have a recession. We got a little bit of inflation. So if you want to call it stagflation, go ahead, no problem. But I think we come out of this on the other side with rates coming back down and growth going back up again. So I don't believe this is stagflation. I think this is a short-term deal. But have we reached bottom? I'd love to say I know for sure whether we have or not. I don't know for sure. I still see signals that make me worry. Yes, great day for these aggressive groups, but these groups had been killed, and there were so many in the money puts on many of the stocks within this area. This could be nothing more than motivation for market makers to take prices higher temporarily, and then the rug comes back out from under us. Don't believe for a second that we couldn't see many more big down days ahead with a recession staring us in the face. So I'm just saying you got to be careful. I mean, still we have the VIX up in the 20s, even with the huge drop in the VIX yesterday. It's still way up there, probably. Let me see where it finished. I want to say mid 20s, 24. Oh, 26. So it's still up 26. That's still high. We could see anything based on the way the volatility, the expectation of volatility remains up there. We are no way out of the woods. I would not look at yesterday's move and say, oh, everything's better now. That could get you in a lot of trouble. You better be on your toes. If this is options related, we're going to probably find out by early next week at the latest. We still have room to the upside, by the way. Let's take a look at that. Let's talk about Max Payne here for a second. S&P 500. 2 days ago, I said Max Payne, 443.79. We were down in the 420s. We actually, back at the end of the day on Monday, we were at 417. Who in their right mind would have thought we could have gotten to 443 in just a few days, right? That's impossible. Well, in 2 days, we've gotten to 435. Don't have a whole lot more to go, right? We've also got this channel to be aware of. So in addition to what I was just talking about in terms of moving averages on the various charts, the price resistance levels, we've also got a channel that we're talking about here on the spider. Can we get through the channel? If we get back up and we can set those highs I was talking about, 44.51 or higher on the S&P 500, we would easily clear this channel. That would be another bullish signal. At least short term, just breaking out of this channel would be a good thing. Can we do it? I don't know. Market makers have a little bit more on the table here. I believe we're going to roll back over, but anytime you see that market rally the way it did yesterday afternoon, I thought it was already rolling over from 2 to 230, and it fooled me, came right back. But that's the volatility. That's Max Payne week. That's a VIX in the 20s and 30s. It's crazy. Market's crazy. QQQ. Max Payne, 354. Where were we a couple of days ago? We were at 317 and change. Did you really think we could go up 37 points on Max Payne in just a couple of days? That's well over 10% on the index. Well, 2 days later, we're at 340. That's a pretty good move. And look, we happen to be almost right on the channel here. Can we get through? Can we clear these moving averages I'm talking about? I don't know. There's still a lot overhead. The market's got still more questions than answers at this point, I think. How about some individual stocks? Datadog. This was a stock that I actually traded. I got out of it yesterday. I took the money and ran because I don't know where it's going. And I got out, it was around 132, 134. I don't remember exactly where it was. I got out, went back down to 124. I was happier than the pig in slop, when it went back to 124, and then came rallying right back at the end of the day back to 132. And it's got upside. Max Payne, 154. Do I think it's going to 154? Probably not. if the market goes lower. But I think the reason that we bounced, first of all, we were right at this gap support level. So that kind of made sense. We gapped up there. Earlier this week was the first time we tested that level. So this nice technical bounce as well. So could we go higher? Absolutely, we could go higher. We also could roll over and break that support level. If the market rolls back over again, it's probably going to happen. Other individual max pain. How about Airbnb? Max pain was 160.50. We were down below 140 at the beginning of the week. Wow, yesterday 155.75. We've almost wiped out all of those in the money puts on Airbnb. Just 1 or 2 days action. Boom, done. So is this just options related? Is what we're seeing just options related? That's the question I keep asking myself. Ford Motor, last one I got for you here. It was down close to 15. Now it's at 16.58. Max pain 17.60. It's got a little bit more room to the upside. When I look at max pain, by the way, for those of you that are not members of Earnings Beats, I talk to our Earnings Beats members about this at all times. I don't use max pain as an area where I don't look at Ford and say, oh, it's at 15, it's going to go to 17.60 because that's where max pain is. Maybe it gets there, but what I'm really looking for is just a directional clue. So what this is telling me, when Ford is trading at 15 and change, and I know max pain's at 17.60, if I wanted to short Ford, there is no way I would have been shorting it at the beginning of the week. Zero chance. Why? Because there's so much financial incentive for market makers to reverse the stock in the near term. Now, Ford may be going down to 12 or 13, but the chances of it happening during option expiration week, probably not very good. This is giving me a directional clue that I think we might get a bounce on Ford. Not that, oh my gosh, Ford's going to 17.60. It's just, I think we could start to gravitate in that direction. And that's what we're doing. Whether or not we get 17.60 remains to be seen. I wouldn't expect that. All right, earnings, not really a whole lot going on here in earnings spotlight. Just wanted to point out Lennar reported its earnings. Stock in pre-market was down 1%. It's been in a downtrend. It's broken down below this double bottom. I don't think it gets back through the 50-day. I'd be really surprised if it did. One stock that is having a good reaction to earnings, at least it was earlier this morning, is PagerDuty PD. Stock's been beaten up really badly, but it is up 13% pre-market. So we're talking probably $3, maybe up near that 30 area. I think it's still in the downtrend, probably with the gap up. It's a sell, to be honest, but I didn't see the entire report. They did beat on bottom line. All right, last thing, 3 you must see. I'm just going to give you 3 stocks. Actually, I'll give you 4 really quick. 4 of the large cap names that I think you've got to be aware of and watch. Apple, can we get through the 50-day moving average? I don't know. Google, let's do it with the L there. Google, 2,500 support. Can we get back through this price resistance area around 27.30 or so? Remains to be seen. Amazon, really strong, coming up through the 50-day. However, we have equal lows. Can we get through this high right here? That's up at 32.50, 32.60. I doubt it, but who knows? We'll see. Microsoft, pretty much equal lows across here as well. I would just say maybe just get through 305. Can we get through 305? That gets us through the 50 end price resistance. I don't know. All right, that's it for me. Appreciate everybody tuning in. I'll be back next week on Monday for your next Trading Places Live. That'll be over at earningsbeats.com. Listen, be careful. Tough week out there. Could see a lot more volatility. I'll be back next week. Enjoy your weekend ahead as well. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.